The looming threat of Russia invading Ukraine has global financial markets on edge, with the ASX slipping after another negative lead from Wall Street. The Australian share market closed lower after overseas markets pulled back, with the world on edge awaiting potential military chaos in Eastern Europe. The benchmark S&P ASX 200 index dropped 0.51% to 7,206.9, while the All Ordinaries index fell 0.59% to 7,490.3. CommSec analyst Stephen Darglian said trade had been cautious in recent days after a strong start to February, with the local bourse running on the spot due to the threat of Russia invading Ukraine. That's somewhat overshadowing the dozens of profit results that we're getting, because of the potential negative impact that type of conflict could have, Mr. Darglian said. It could lead to the involvement of other nations, sanctions as well. IG market analyst Kyle Rodder agreed all eyes were on watch for war. Volatility has subsided somewhat today, but market participants are wary of an invasion at any moment, as brinkmanship and the stakes stay high, Mr. Rodder said. The uncertainty here has been layered upon the ongoing concerns for markets about the path forward for global monetary policy, as traders await US PPI, Producer Price Index, data tonight, with the gauge an insight into both the inflation outlook and the prospects for profit margins for US companies. US soldiers walked aboard a plane in North Carolina on Monday, preparing to deploy to Europe as the crisis between Russia and Ukraine escalates. Picture, Alison Joyce, AFP. Despite the tensions in Europe helping oil prices in their march towards $100 a barrel, the local energy sector went from being the best performer on Monday to the worst on Tuesday. I think what we're seeing here is a bit of profit taking because they've really been some of the best performers on our market since the start of this year, Mr. Darglian said. Beach Energy, which rocketed 9.43% on Monday after posting strong first-half results, tumbled 10.46% to $1.45. Santos also erased all of the prior day's 4.04% gain, dropping 4.15% to $7.40, while Woodside fared less poorly, slipping 2.52% to $26.74. The gold price had risen for 7 straight days and was near an 8-month high, Mr. Darglian said. AngloGold Ashanti put on 3.89% to $5.88, but Newcrest eased 0.25% to $23.64. There's been a bit of action in China today too, with regulators over their jawboning iron ore prices 10% lower, which has weighed on the ASX's materials sector today despite BHP's solid results and record dividend, Mr. Rodder said. BHP, the biggest company on the ASX, only edged 0.3% higher to $48.18, despite smashing its dividend estimate by 21%, OMG Chief Executive Ivan Chauralov said. We're not feeling any kind of need to go out and do it, BHP Chief Executive Mike Henry told reporters in response to a question about merger and acquisitions, suggesting the miner was instead looking at unlocking more copper units, more nickel units around its existing assets more quickly. This announcement went alongside a strong performance above the estimated profit for the first half of FY22 due to the strength in iron ore prices, he said. Rio Tinto slid 2.33% to $118.75, and Fortescue slumped 5.1% to $21.59. Metals recycler Sims Limited rocketed 13.68% to $17.04 after booking a mammoth 622% surge in first-half net profit. Chief Executive Alastair Field said earnings beat guidance thanks to trading margin growth despite volatile freight markets and inflationary pressures. Jobs website Seek rallied 6.08% to $29.47, unveiling a 59% jump in first-half revenue. Businesses continued to rehire following COVID-related cuts, and in many cases restarted investment, Chief Executive Ian Narev said. Whilst candidate activity on our sites remained high, application rates were weaker. Disposable gloves and condoms maker Ansell gave up 1.13% to $25.47 after achieving what Chief Executive Neil Salmon described as respectable first-half organic sales growth of 7.5%. It fell 14% on the 31st of January, when it warned of lower profits for the year, Mr. Darglian said. Its revenues increased, its profits on the other hand have fallen almost 30%, partly because of the issues with some of its factories across Southeast Asia, which have had to be temporarily closed due to COVID. Consumer confidence rose the most last week in Queensland, according to ANZ Roy Morgan. Picture, Nigel Howlett. 7 West Media dropped 6.76% to 69 cents. The slip comes as a bit of a surprise as the media business reported strong half-yearly results, Mr. Chowriloff said. Crown Resorts dipped 0.32% to $12.60 after S&P Global Ratings said Blackstone's board-backed takeover offer could adversely affect the gaming group's credit quality, depending on the U.S. private equity giant's financing strategy. ANZ backtracked 1.42% to $27.80. Commonwealth Bank gave up 0.55% to $99.49. National Australia Bank inched 1 cent lower to $30.42, and Westpac shed 3.39% to $23.07. In economic news, the latest ANZ Roy Morgan Consumer Confidence Index rose 3.3% last week, its biggest weekly gain since early April last year, with Queensland the most upbeat. The passing of the Omicron peak, along with the news that international borders will reopen to vaccinated tourists later this month, no doubt helped lift sentiment despite rising petrol prices. ANZ Head of Australian Economics David Plank said. The Aussie dollar was fetching 71.1 US cents, 52.52 British pence, and 62.8 euro cents in afternoon trade.